Hello and welcome to Blythe Ray Business News. For this edition, I'm joined by Jay Cheatham and Bob Rosenthal from Pantheon Resources. Pantheon, listed in London on the AIM market capitalization of around about £900 million sterling, a ticker of PANR. Pantheon is an energy company very active in Alaska. The company has just announced it's completed the vertical section of the Alkaid #2 well. That sounds a bit technical. The guys are explaining it to us in simple terms. Gentlemen, you've made the announcement. You've told us that this means a, quotes, material upgrade in what you have. Jay, Chief Executive, tell us what that means.
Well, Tim, before I do that, it's just always a pleasure to be with you. Thanks for having us on the program. But yes, as you mentioned, we finished the vertical section, the pilot hole, which we drilled to total depth. It was slightly deviated from our gravel pad along the Dalton Highway, very important because we can drill year-round from the Dalton Highway, to just above 8,900 feet. We penetrated basically the shelf margin deltaic, the Alkaid anomaly, and then the deeper Alkaid section that we hadn't penetrated previously in the Alkaid #1 well. We got really great data, and great data from two standpoints. One, it is super high quality data. Bob can explain that to you a little more. But secondly, in each of these zones, we got better reservoir quality, which means porosity and permeability, and that's what allows you to produce the oil. Better reservoir parameters than we had predicted, and better reservoir parameters than in the Alkaid #1 well. Also, one more point, our predictions were within a few feet, and we moved 4.5 miles away from the Alkaid #1 well. So our geologists are spot on, Tim. I can't tell you how happy we are with our technical work and technical program.
Within a few feet, this is like putting a moonshot on the moon and landing it within a few feet of where you wanted to be. So your technical guys, well done to them. But you said, Jay, the reservoir quality exceeds expectations, right? Many of the viewers of the show are not petrochemical engineers. They're not geologists. They're investors. They're potential investors. What does it mean? What does it mean for them that you've actually exceeded expectations and you've got this amazing result? Try and boil it down for us a little bit, please.
So maybe I'll take that one, Tim. And so I'll start in the Alkaid anomaly, the zone in where we're going to be running our horizontal well. So in very simple terms, what we see in the Alkaid, this zone, are better reservoir parameters, i.e., as Jay said, better reservoir quality than we have seen in the Alkaid well. That leads to resource upgrades, that leads to, think of it as oil in place and reservoir, possibly even reservoir performance. So one is we saw a certain amount of, reservoir thickness and reservoir quality at Alkaid 1. That is how we modeled all of our resource estimates and our sort of potential recoveries based on what we saw in Alkaid 1. We had hoped and we thought as we moved in this direction, we would penetrate Alkaid 2 and possibly see better reservoir. And that actually happened, but it has not been in part of any of our resource assessment or any of our modeling. So that's number one. Number two is, as you go up into the shelf margin deltaic, again, keeping it very simple, is we've moved 4.5 miles from Alkaid #1 to Alkaid #2. We saw a thick section of the shelf margin deltaics, It has better reservoir quality than what we saw in the Alkaid #1. And we can now confidently even move it further to the east underneath the Dalton Highway and underneath the pipeline. And then the third is Alkaid. So underneath the Alkaid anomaly, and remember, the only resource that was given to the Alkaid anomaly was the first 200 feet, 240 feet of the Alkaid section that was penetrated. Well, we drilled approximately 600 feet of that section. We drilled we TD'd 300 feet below where we TD'd the Alkaid #1 well. So we've got oil down another 300 feet below where we had TD'd the first well. None of that has been at any time has been made part of our resource assessment. So we can now confidently come up with a new resource, for the first time, a resource for that section.
So what I'm hearing, and Bob, you say, as I say, keep it simple, and you start talking about shelf margin deltaics, and I go, how simple is that? But what I'm hearing is you found more stuff and it's more accessible.
Keeping it even simpler, we have 2 very large oil fields stacked in top of each other, sitting right underneath the highway going over to the pipeline. And Jay can take you through more of that on the implications.
Okay.
But that is unique, pretty much unique, that I can think of like anywhere in the world.
Bob, thank you for that. And what I'm now taking away is you've got 2 enormous discoveries, one stacked on top of the other. Tremendous, more than you thought you had. What I would like to know in simple terms, and Jay, perhaps you can pick this up, is what does that now mean for the next stage of the Alkaid #2? And when can simple people like me expect to see things like flow rates? Jay.
Okay, so right now we're in the process of doing the horizontal portion of the wellbore, but it's not an immediate process. So we drill it, we case it, then we're going to move the larger rig off, move the less expensive completion rig in, and we will perforate and simulate various zones from the furthest from the vertical to the nearest to the vertical. That will take some time. We expect flow rates in late September or early October. And of course, this is really key for us because it's what will prove commerciality, as Bob said, of these stacked reservoirs that we have that we can access from the Dalton Highway. And we have literally now extended the shelf margin deltaic even further to the north and the east. We have hundreds of millions of barrels that we can develop along that corridor. Tim.
I was going to ask you, because clearly you've had fantastic news on Alkaid #2, but what does this initial analysis of that particular part of the resource mean for the rest of the portfolio?
Well, I mean, we would ultimately start our development, as we've talked about, along the Dalton Highway, where we can work 24/7, 12 months a year. And we can use gravel, and so we don't have to do our exploration on winter ice wells. We can drill hundreds of wells along the Dalton Highway, moving then gradually to the west. You know, everybody knows we have a huge resource here. If we prove commerciality, which we all believe we will with this Alkaid #2 well, it's literally thousands of wells and billions of barrels of recoverable oil that can be accessed fairly readily. You know, we will start producing this year from the Alkaid #2 well and trucking that oil up to pump station 1.
You'll be producing this year?
Yes.
Excellent. Bob, let me just come to you for the final question. You know, news flow, lifeblood of all companies. What can we look for as the headlines coming out of Pantheon in the next few months?
Well, we're working on our data really hard, and there's going to be a lot of news flow on the technical work that's coming up, the flow, when we flow test the well, and it's just going to be huge amount of information coming out to everyone.
So no shortage of data. Look, Jay, Bob, thanks for joining us today. Congratulations on the progress so far. That was Jay Cheatham, Bob Rosenthal from Pantheon Resources. As I said at the start of the show, Pantheon, listed in London, active in Alaska, a market cap of £900 million, and a ticker of PANR. That's it for Blythe Ray Business News for this edition. Thanks for watching.